Hey everyone, welcome back and thank you so much for taking the time to support the channel and join me for this daily GameStop DD video in which we will break down our options chain discussing the floors, walls, max pain, and likely pin for each of the expirations, going through our technical analysis and newly incorporated Rory Kittenger indicators, which I don't necessarily have a ton of experience with. However, luckily, we're going to couple that with my personal technical analysis style as well, fusing the two for what I imagine will be an absolute deadly readout. And we have some data as well, the IV, cost to borrow, available shares, utilization, short interest, things like this. If there's anything else that you want covered data wise, don't hesitate. Let me know in the comments below. And of course, make sure to leave a like and subscribe to the channel as well for future videos. So, before we get into our technical analysis breakdown, let's talk about our options chain really quick. The put to call ratio is still super duper bullish, which is awesome, and I believe will continue to be so as we are trending above max pain. Max pain's moving up week by week, day by day, which is nice to see. I think it was 25 yesterday, 25.5 today, which is pretty cool. And then like a lot of calls in the money with a literal ton of calls ready to come in the money. However, if they don't, they're going to be acting as a massive resistance for us. So moving into our expirations for the current week, we have a wall at 30. There's so many contracts here. We also have a lot at 27. However, we're getting there, so that could be really nice. And then there's some 28s as well. So, I fear that a lot of this chain gets burnt again this week. That's typically something that we see where the last few expiries happen to, end out of the money, unfortunately. However, I think these 27s and these 28s could be good on the week. And, that's applied pressure for next week. It's just a little bit unfortunate for all of the 30s, 33s, and even 45s. You crazy dogs. So it is what it is. The pin here is 25 to 26, with 30 being the lid. However, there's a couple other things to consider here. For example, the corporate catalyst of the warrants, which if you're interested in, I did an in-depth comparison to ENVX and GameStop's timeline in our last video. Go check that out. But again, that additional pressure could affect this chain in comparison to what we would typically do for a readout, right? We have to think of these other layers as well. Moving forward to October 3rd, 27 is the shelf, 30 is still the dominant cap here for us. We've got a ton of calls at 30 again. And, eventually one of these weeks we're going to break 30. And then all of those other 30s are going to be support, which is nice. However, for the first couple weeks that we're starting out, the end of the chain, which has unfortunately been the 30s, has been getting absolutely torched. And there's a lot of 28s here as well, which is nice to see. So that's the cool thing about what we currently have. And it might not be a classical ramp, but it's a bit of a staircase where we're going up on different weeks, which is really nice, as now, they are still burning the chain weekly at the top of it. But because it's not just focused in on the 1 week or the 2 weeks, it's really the whole year. It's very hard to knock us down as we continue to work our way up into the 10th. A wide range here. We've got that cushion around 22, 25, that wall that still persists near 30, as that is, again, going to be a commonality within all of these strikes. A bit of a newer week that is starting to build up. A lot of 27s purchased today, as well as those 30s into the 17th. Now, this is our monthly expiry, OPEX max pain 24. I'd love to see this climb up a little bit. However, it is what it is. The big monthly tug of war, 30 is going to be the battleground here. Are we going to get above it? Are they going to torch us on that monthly expiry? That's what they would love to do. I am certain of it. This is their end game, is below 30 on October 17th, but we have the ex-dividend date on the 3rd, delivery of that on the 7th, and supposed forced delivery by the shorts on the warrants on all those borrowed shares. looking at cost to borrow, utilization, available shares to track this theory as well moving forward. And then, just layering everything, right? So the options chain is looking pretty good here on the month, but we need to get there. We need to get to 30. We need some form of, octane booster, if you will. Some 23s on the chain today. Like someone's selling these puts, sure, that's great. That ties up a lot of capital when you should just be long on the stock in general. And B, who's buying these, right? So, yeah, well, okay, you guys do you. That's fine. We see some 27s. I like that. Some 30s and 35s. Be careful because that's going to be the top of the chain. And what happens to the top of the chain? It gets burned. So what do? You buy in the money. You avoid that danger. However, if something does pop, this is where you get buco bucks. But it's better to be safe and just consistently repeat those gains instead of just playing these lottos. 28, 30, looking good. If we do get there, and again, this is post 17, so maybe these are finally the 30s that are in the money for us, and of course 35 and 40s here as well, which is a little bit strange to me, but maybe people know something that I don't. Maybe they're a little bit more comfortable with some higher risk than I am. That could be it as well. Moving forward to the 24th, lighter book here. The soft pin around 24, 26 on the last 30 breaks. Nothing too much to look at there on the 24th, sorry. And then the 31st, had my wrong dates here. Thin open interest here as well. Dealer control, the default magnets around 24 to 26. The wall, 26, 28. The floor scattered and quite light. That 26 puts is really nothing, though. The option open interest story is almost non-existent there. November 21st, and again, a lot of these are new expiries that are just opening up for us, and they are subject to fill in as we get closer, as we see happening, right? We see a big old 30 block purchased, and let's add that to the pile, which is nice because now we have these 30s later dated as well, and you're not going to be able to keep us under it forever. Eventually, it will flip, and the resistance wall is going to act now as a support area for us, which would be quite nice, honestly. And where are we? The 21st. Let's check out our final expiry. These leaps. There are so many 30s here, like 43,000, 40,000 25s, and we're down to 32,000 20s, and we see a lot of volume on those. And the reduction of open interest in comparison to yesterday, right? As that was kind of an outlier yesterday, this volume, it looks like it's rolling out. It looks like the bottom of the chain is starting to move out a little bit, which is nice to see because, are we going back to 20? Probably not. Could these 20s be moved up to 22s and 24s? Absolutely. And well, maybe 25s if you're confident. Why not? Which is nice to see. And then, we get to 30, we get to 32, and now these 22s and 24s and maybe 25s roll up to 27 and 28. And, we just can continue that momentum, until obviously it fades away, which it will at some point. And that's, again, why we monitor all of this day by day. The borrow rate is up, not substantially. The rebate is down, not substantially, and the shares available remains stagnant. The IV is chilling. We traded absolutely sideways today, so there's really no change here at all. However, it remains, in my opinion, quite suppressed. There is a lot of room to the upside on this, which is literally a price multiplier on the options chain, if you have any. The IV has been so suppressed. Now, I'm not entirely certain if that's due to the dividend coming out, and a lot of people are trying to dodge a low liquidity environment on the old chain. However, there is a lot of individuals who are looking for the tied warrant deliverability on that. Now, if those are in the money, that's great because the spread's not going to be terrible and you're just probably exercising them. However, if they're out of the money on the old chain that's now liquid, no buyers. There might be, though. I don't know. It depends on this whole shorts borrowed shares return. You know what I mean? I don't know how this happens, but we'll have to wait and see. And yeah, so that is, I guess, subject to change. Without rambling too much, utilization's chilling, right? We see that here as well. Short interest is actually down a little bit. Cost to borrow up a little bit, but no changes really here for us at all. And again, that IV is just kind of ticking sideways, down a little bit today, but we're getting somewhere, and we just need it to break, right? We just want to break. We're really close, trending upwards, trending upwards, trending upwards. We just want that break up. Hopefully at some point here as we get closer to the third. So that is what we have for you within our options readout, our data. Again, if there's any way for us to improve upon this for you, let us know. And into the technical analysis, we've incorporated the Rory Kittenger indicators to our own chart. Now looking at the RSI, looking at the MACD, the PMO. We are also comparing GameStop to the SPX as well, right? So let's get over here. This is available for you to import for yourself. So all of those indicators are there. There are so many of them that you will need a paid plan, though, unfortunately. And if you don't have one of those, well, that's what the video's for, right? But if you do, grab an import, and then you've got all these indicators immediately for you. You don't have to set them up at all, which is dandy. So 2 charts, both GameStop. The top one is going to have our price with some simple moving averages, the 20, the 50, the 100. Then we have our RSI and our volume here, right? Simple stuff. On the bottom chart, we have our moving average on our MACD, right? And then we will have just our GameStop price underneath that. I know it gets a little squished. Again, with some simple moving averages here. These are different moving averages. Here we have the 8, the 30, and the 100, right? I think we are only using settings the first 2, though, the 8 and 30, right? And then below that, we have our on-balance volume, then our GameStop SPX comparison, as well as our PMO, right? So the PMO is just a smooth, scaled rate of change, similar to what a MACD would be, right? They're both momentum oscillating indicators, and then comparing all of these together to maybe formulate a good opinion of our future price movement. On that note, a lot of my experience is with is within my own indicators that I've become comfortable with in my last 5 years of trading. I use these every single day. I have my custom volume monitor. I have also my average volume on the bar here, which is nice in case, sometimes I like to be visual, other times I like to really get into the numbers. I'm using ICT principles, the market structure shift, order block, fair value gap, volume imbalance, breaker block, all these things, order blocks, you name it, right? So I'm very comfortable with all those things. And then I also incorporate exponential moving averages, which is basically the same thing as a simple moving average, just a little bit different calculation on it. And this is how I've become comfortable trading in my past. I used to use a lot of different things as well, and have just tried to simplify it as much as possible in order to help myself keep consistent, right? Sometimes too much noise is a little confusing. However, I guess before we get into the kitty ones, let's just do my breakdown. It's simple, and I already know it because it doesn't change day by day. Look what today did. We tracked perfectly sideways, so it's the same as it was yesterday. We have a bullish order block formed off of our market structure shift when we break out of our consolidation phase. And then we challenged and invalidated a bearish order block of old, which now, as we retest it, has converted it into a bullish breaker block. And then, on top of that, we have our bullish reversal signal, the 21 crossing the 50, pairing that with a key level breakout, which is our 200, right? So the 21 is the teal, The 50 is the dark blue, the 200 is the red, right? That's great. And then now we have the gap fill on the 1 day that opened up from the bonds, right? The earnings gap down bond offering, and the upper band of that 28.4. So looking at that on a little bit more of a zoomed in time frame, we see the 50% of the gap, the consequent encroachment, acting as resistance, resistance, resistance. But now we've broken through it. It can act hopefully as support as one converts into the other typically. Let's get to that upper band. On that note, the ex-dividend date is coming up. We did a complete breakdown and comparison of ENVX's warrants and GameStop's warrants and the timeline, and what to expect moving forward in our last video. Go check that out as well. And yeah, with that being said, things look good. Just looking to kind of finish the week, I guess, above 26.5. That would be cool. However, if things want to go faster than that, I'm perfectly willing to accept that. Now into, again, our kitty charts here. Some things I want to talk about that I've noticed. And again, my understanding of these indicators is going to grow as we continue to talk about them every day for the next maybe 10 years. So on that note, well, we're here for the long time, right? We see it being overbought, right? We're above that 70 mark, which typically is an area in which you'd like to scale out, reduce risk, maybe take some profits, specifically on maybe your short-dated options. However, this is not your typical GameStop scenario because we A, have a loaded options chain, and B, have a corporate catalyst, which I guess is driving the loaded options chain, right? And then C, I want to bring your attention to the attention that's brought to us from these charts, I guess. We see it break down, but hold an upward trend and then displace upwards aggressively, right? So that's what we're looking for. Ideally here, hopefully, is we've broken upwards. Now let's try to hold that and displace up once higher, kind of similarly to how we did here, right? We break up, pull down, while the price doesn't break down, right? So we want to see a slight retracement in the RSI or relative strength index, right? With continued bullish consolidation, upwards consolidation. Obviously not any massive big candles going upwards, but just a beep boop, kind of going sideways, right? Maybe a little bit up, maybe a little bit more sideways, a tiny bit down, right? And then maybe something breaks and we get that displacement move to the upside. So that's just kind of what I'm looking at there as we spend day zero with these charts. Now I did a breakdown of all these indicators in another video, more or less familiarizing myself with them, which is great. So that's the RSI, which is on our top chart. Our volume here is low as well. Again, as we've seen on my custom volume indicator, we're trending below the daily 30 average. So nothing to look at there. So MACD is bullish when it crosses above the zero line. Now, typically, I've always used this with a signal line. Kittenger does not have a signal line here. It's just our moving average, and I guess we would use that equilibrium or zero as our signal indicator, if you will. So above it, bullish, below it, bearish, and then the histogram, the bars behind it, is going to be the strength of that momentum, right? So the bigger the bars are, the stronger the momentum is, and then whether the line is above or below the 50% mark is going to kind of determine A, its average, because it is a moving average, but B, whether it's bullish momentum for us or bearish, right? So, that's not too much, but as we have so many of these indicators, we layer them on top of each other, and it's like, oh, yeah, we get a little bit more of a clear picture than you would just from one, right? Specifically, the RSI. So this looks peak, but now compare that maybe now with our PMO, it doesn't look like it's peaked out, right? It looks like we have a lot of room here still, right? And then, we compare that to what our attention has been pulled to already, and, maybe things are still looking good. considering, again, the options chain, technical analysis, and corporate catalysts. So we have our 21 simple average and our 50 average here for us, which I guess we would play them in a similar fashion to I play my own, right? Where, we have the bullish reversal here, which is nice because, sometimes you get these fake setups here, which you kind of did here. This is kind of a fake reversal, which is unfortunate, right? Because it did cross, but then immediately whiplash and rejected back down. So sometimes those are what you want to avoid. Here we're doing it a bunch too, which is unfortunate. So just be aware of potential false positives, and then the divergence, like how far the two can separate for confirmation, right? Which does look really healthy here. So off the bottom trend line, you hit the reversal, move up. That looks great, right? Let's just try to keep the price above this simple moving average, right? Because it is, again, you got to remember, a lagging indicator. And if the price goes below it, then it's going to trend down. And then the averages, one tracks more closely to it than the other. One's a little bit lagging, right? On that note, on balance volume increasing, right? We had, these warrants, or sorry, not the warrants, the bonds kind of slam us down and killed the OBV, right? Like these were definite step downs, but still obviously remaining elevated in general, like massively so. Whoa, right? But just looking short term here, boys are coming out to play. Some of that coming back, which is nice to see. And as we do track higher, the bond arbitrage players will begin to unwind that hedge, right? So that's going to be a lot of volume being added back to the puzzle. Moving down, we have GameStop SPX comparison. This differs wildly, and obviously in the last week, GameStop's been running, so GameStop's at a plus 17% premium. However, if we zoom out to where the bonds were, we're still at a massive discount, right? Because when these bonds hit us, we just got obliterated in comparison to the general market. And because of that, we're trading at what I believe to be a massive discount. And this is where, lining all these things up does become a little bit fun, right? So that says that there's room, right? In my opinion, the PMO just reversed and is just starting to trend upwards, which to me has room because it needs to trend upwards before it trends downwards. And, on that note, there's room to the upside for sure, specifically if we get a displacement move. But again, this is more, I think, about the entries and the exits, right? Where we talked about this on the day it happened, and that's why we talked about it in an older video when we had the crossover, right? There's like a couple days where ooh, this is going to happen. It did, and then, we can see that all take place here. So nothing really important here other than, there's potentially some room here, right? From the bottom to the curve up it takes quite a bit, and this could take us definitely post dividend date. So that's interesting, I suppose. And that's kind of all we have for the Kittenger indicators here. And I guess just my elementary level readout, as I don't have a ton of experience with it. However, together we're going to grow that experience, right? So we're going to keep a track on them day by day. And if you have any questions about them, don't hesitate, because I'll look it up and then we can all learn together, right? If there's anything else that you'd like to know about GameStop in general, it would be my pleasure. Just have a great day. That's what's most important to me, and I'll see you all tomorrow. Do take care.